All right, so we're going to look at the DXY and GBP USD. So those are the two pair which I'm going to analyze for today. So you know that if you are trading any USD pair, you always good to look at the XY and know the strength of dollar. So we want to know the strength of dollar before we can be able to analyze our currency pair. So JPP USD is actually one of my favorite pair which I frequently trade, and gold and euro US. But I'm going to look at GU for today and the XY. So let's go to the XY and see what the market has for us. So we're trying to do a market forecast for this coming week. All right, this is the XY, and you have to note that when analyzing those entering now, I don't know, this they're actually going to really be disturbing. When you're analyzing, you have to do a top-down analysis, starting from the higher time frame to the lower time frame, where you want to get your precise entries on the lower time frame, 15, 5 minutes, 3 minutes. So you start from the daily time frame, because most of us, I guess, we are day traders, so we want to start from the daily time frame and start seeing what uh the market actually looks like. You can as well start from the monthly, weekly, but as a day trader, starting from the daily time frame is actually good for you. So let's go to the daily time frame and see what the XY is telling us. So if we can look at it precisely, we'll see that the market was first of all in an uptrend move. You can see from here we had an uptrend move, creating a series of higher highs and higher lows, higher highs and higher lows being created, and later on break out this trend line, reversing to the downwards move, telling us that now sellers are in control, and we can see the market has been creating a series of higher lows and lower lows, telling us we are in the downtrend. So looking at the market now on the daily time frame, I would say that the XY is bearish. So I would say that the XY is bearish. We can see that, and this is our recent high, and here is our recent low. So let me just remove this trend line here. So I was just marking that for you to actually see what it holds. So at this point, we have a break there, break of structure, and we are expecting the market to pull at this level. So we have this high and this other one here. But now let me try to expand a little bit. So somebody's just entering now. Oh God. Right. I'm sure we can see clearly. I've tried to expand so that it can be clear. So looking at this region, having a break of structure here, telling me that this is actually a supply zone here. This is a supply zone, and you can see also a powerful bearish move at this move. You look at the candles. This is a daily time frame. Remember, this is a daily time frame, and look at the move of these candles. So we can say that this is actually a strong zone as well, because I can see an imbalance here which the market actually needs to fill. Let me mark that out. This is, remember, this is still uh the daily time frame, and this is not even where we want to look at our precise entries. And we have this break, this support break at this level, and this other one telling us we are moving down, and we have this recent low at this level. So having that in mind, let me remove this. So I've already seen that this zone can actually be, let me just mark it out, a good zone to get in for a sell. So the market can actually push up to this level. Moving on to the 4-hour time frame to see what the market has for us. Okay, so yeah, there is still no much difference. It's still a downward move, and the market is pushing up to come to this level, feel the imbalance is left here, and also mitigate this zone. So I've already marked this zone, and it is a key zone, and this other level, it's our recent low. This is actually the daily time frame, and which we can mark it to be our demand zone. Can mark it to be our demand zone. So if I want to draw a trend line here, you will see that you actually have a lot of conference at this particular area. So we're waiting for something at this level, because remember, this is a support which the market can pull back and retrace at this support level. If you look at it, the market actually started retracing at this support level, which is actually support becoming resistance, which gives us an indication of sell. Or maybe you just want to wait for a little push to this area before you can get into your trade. So now what we want to do, since we are looking for a sell, we want to move down to a lower time frame to see a best entry for us which we can get in. Let's move to the 1 hour time frame. Let me check. I think some people, okay, right. While this is going on, you can jot down your questions in the chat box, which can be able to look at it later on. So now we are on 1 hour time frame, and let me try to expand this, and I have a push here. I can see this break at this level, and this can actually be another key zone. This can actually be another key zone for me. So let me just mark it out with this. So you can see the market going to that level, and liquidity actually lies here. So uh, liquidity lie at the zone, meaning that if the market can be able to clear this and tap in here, you can actually be able to look for some sales to get back to this demand zone down. And now, looking at this, what you always want to look at is, first of all, the market will always do some accumulation, which we call that the Asian range. So you always want to see if the market has already either clearing the highs of the range or the lows, and respects your points of interest either at the demand or at the supply zone. Then you should be able to give you more confidence for an entry. So looking here, I'm also seeing a break of structure here. So we actually have another zone at this level. We have another zone at this level. So the market can just be able to pull to this area. So if I'm wanting to take from this, if I'm wanting to sell from this region, sorry, I'm wanting to sell from this region. This is actually 1 hour, and that is not, as a day trader, you want to go down to 15 minutes to get your precise entry, or 30 minutes. That's actually huge if you're targeting from, and your stop loss. So let's go to a 15 minutes time frame and look for entries there. Now looking at the 15 minutes, you will see that we might not even wait for the market to reach at this resistance zone which I've marked here. We might not even wait for the market to reach there, because you can see here a change of character there, and you see how the market has pulled into this region and have a small sell. So yeah, liquidity has been created at this level. So if tomorrow reach, you want to see how the market is going to react at this zone and at this upper zone. So you know already that you are having a buy position here. You can see we have a break of structure to the upside, and you can see the move of these candles, this impulse move. It's really huge, telling us that the buyers actually got at this zone, had a strong momentum here. And let me just go to the 4 hour time frame and check out this zone again. So you see the move of the candle, and we also see that we have a bullish engulfing, a bullish engulfing, right? On 4 hour, we have a bullish engulfing. So to be more precise, I want to use my Fibonacci to make sure I'm at the good zone. So you are buying at discount zone, and you are selling at the, somebody just coming now. You are selling at premium zone. You're buying at discounts and you are selling at premium. So definitely this one is actually going to be a little bit big. So I want to start buying at 70%. I want to start buying at 70%. And if I'm selling, you want to look at this zone. So you will see that this is actually going to be our zone for sale. So we are waiting for that. Definitely the market will create an Asian range. So looking at this, you already see some consolidation at this level. See the move, that's liquidity for you being created. So immediately the market clears out liquidity and taps into your zone is an indication, and you see a confirmation, it's an indication for you to get in. And remember, on the higher time frame, what is actually the direction of the market? It's bearish. So you know that if you are taking any buy, it's a counter trade. So it's a counter trade which you don't expect to move, you don't expect to have a high move before you can be able to get. You need to know the precise positions which you can be able to get out from the market. So looking at this buy zone, you see that it's actually big, because if I want to mark it out from the level of our stop loss, 46, that's big. So you need to know clearly, because this is actually fair value gap resting imbalance. The market actually needs to fill these candles, mitigate this zone, this demand zone, and do some little buy there. And if we are looking for a sell at this level, you always need to give a breathing space. You always need to give a breathing space for your stop loss, so that you don't get kicked out of the market and you see the market moving to your direction because you had a poor stop loss position. So 29. So if I'm putting my stop loss there, let me go to higher time frame and see that position. It's okay at that level. So the liquidity up there would have been cleared, meaning that if the market actually wants to respect the bearish move, can be able to sell from there. And now see the risk to rewards, 1:2, which is not bad. It's actually a good trade to take if the market actually respects this and you see a confirmation. So let's go to now we've seen that the direction of the market on the XY is actually bearish. And so what do you want to see on GU? You want to see but uh, opportunities of buys. So you now know that on GU you are going to see but buys, Euro USD buys, gold buys. So you now uh, know what you're going to expect on any USD pair. So this is GU. Let's go to the daily time frame and see what the market has for us. So we can see that the market has been selling. And why? Because if you go back, you see the market tap into the supply zone here. Okay, you see the market tap into this supply zone here and started pulling down. That is why it has been selling for some time now. But looking at it, we are in an uptrend, right? We are in an uptrend. The market has been creating a series of higher highs and higher lows, series of higher highs and higher lows. So we now get the concept, we now have the idea of the direction of the market, and what we are looking forward to do is to look for more buy positions, right? So let's go to 4-hour time frame and see what we have. So this is on the daily, this was our recent high and this was our recent low. Let me go to the daily back. So our recent low, okay. 4-hour. So ask yourself, why is the market buying at this level? So you notice that if you look here, you see a demand zone here, and you see that the market actually mitigate this zone clears out the imbalance that was being left at the zone. So that's why the market has been buying from this area, and it was actually big because it's actually from here. It's actually from here. You see? So you see this first buy. You see this first buy. This is the first buy, and now this is the second, right? The market tap into that zone. So if we were looking for a buy, what are we expecting? We're expecting the market to maybe now respect this area, mm, and push up. So we're expecting the market to respect that area and push up, but we're going to see that when we move to the lower time frame, a precise area where we can be able to buy from there. So that's our 4 hours time frame supply zone. That's our supply zone there. And we have this demand zone here. So let's move to 1 hour and see what we get. Okay, this is 1 hour. So let me expand again and see if we can see something. So look here, you see that we have a change of character here. I don't know if you can see that, but that's a change of character there. We have a break of structure here, right? And we have a change of character, making this area, let me show it, making this area to be another demand zone, which the market can get into it and pull up. Yeah, because we have fair value gap also. We have fair value gap there, which the market can be able to pull in. And look at this imbalance here. Look at this imbalance here. You can see the imbalance. So, and now liquidity is lying here. That is why I mark this zone here to be a supply zone. Liquidity is lying here at this zone. We have liquidity. So there's money lying here. So the market can clear this, and note this is another zone here which the market can still respect. But I'm not going to mark that. I'm going to mark the right zone on the lower time frame, and so we can be able to see. So you see, there is actually Asian range is going to be created at this level. We're going to have a lot of accumulation at this level. So if it clears either the highs and now tap into this supply zone here, note so you can be able to tap into this supply zone at the 70% Fibonacci retracement. So this buy zone which I marked here, if I want to take my Fibonacci, you will see that it's actually at 70% as well. So it's not bad. It's below the discount level. And this is actually another zone here. This is a fair value gap is lying here, which the market can be able to respect it. But if I want to use my Fibonacci tool, that is for a buy, You see that this is actually excuse me, this is actually 50%. It's even above equilibrium. I don't want to be buying at equilibrium because if you want to look at the stop loss, so let me mark this. You want to look at the stop loss because your stop loss is just going to be below here. That is 79 pips. Too much. Even still at this level, it's still big. So we'll have to go to 15 minutes and look for a precise entry there. Go to 15 minutes and look for a precise entry. So we now see the change of character which I was talking about clearly on the 15 minutes. It was not really that visible on the 1 hour time frame. And now we can see our entry position. So I'll be looking forward to buy here. Use Fibonacci and have a precise entry. Thirty-two pips. It's not bad. So you see your stop loss is below this support. You could still put your stop loss below here, but the market can actually still clear because this is a liquidity line here. Note, this is liquidity. That is liquidity there. The market can still clear that liquidity and before moving up and takes you out of the market. So you don't want to be the liquidity, right? That's why you always have to be keen to know and to this level. That's huge. 1:5. Why would you not want to take this? It's a good trade for you to get in and you can sell from here, you buy from here. Selling, know that it's a counter trade because the direction of the market on GU is what? It's buy. It's not sell, it's buy. So knowing that you can actually be able to tap from here. So we are looking for buying entries at this zone. So you want to look at market reaction here. Take note of market reaction at that level. Right, so that is all on GU. If you have any questions, drop them in the chat box before I end this session. I want to be able to analyze other pairs for now. So only GU. Having a view on GU, GU and Euro USD, they move the same. So you can already start picturing what is going to happen on Euro USD. Can already start picturing what is going to happen on Euro USD.